Good morning, everyone. So today is our second session on analysis of financial statements. Uh, we had discussed some questions in the last class, so we just carry forward the same. Uh, Today's sessions will be some complete financial statements preparation. Of course, I'll run you through the adjustments. The formats, maybe you could try it out at home. Okay. So good morning, Jeannie. Good morning. So let us start off with case study 5 that's there on your study material. Okay, so Deepak started a new company, Soft Bharati Private Limited with Iktara Limited, wherein investment of 55% is done by Iktara and the rest by Deepak. Voting powers are to be given as per the proportionate share of capital contribution. So in the new company, that is Soft Bharati Limited, I have an individual Deepak and I have a company Iktara Limited. Iktara Limited is owning 55%, Deepak is owning balance 45%. Now, voting powers are to be given as per the proportionate share of capital contribution. So, therefore, Iktara will get more than 50%. Clearly, it is a controlling stake. Again, voting power in Ind AS parlance, the stake and the control are totally different. But here the voting power is going in excess to Iktara Limited in excess of 50%. So naturally control lies with Iktara Limited. So therefore, Soft Bharati is the subsidiary of Iktara Limited. Okay. So there is a holding subsidiary relationship between the two companies. The new company formed was the subsidiary of Iktara Limited. Even if they had not given, we could have derived this conclusion. With two directors, and eventually Deepak becomes one of the directors of the company. A consultant was hired and he charged 30,000 for incorporation of the company and to do other necessary statutory registrations. 30,000 is to be charged off as an expense in the books as after incorporation of the company. The company Soft Bharati was incorporated on 1st April 20X1. The financials of Iktara are prepared as per Ind AS. An accountant who was hired at the time of the company's incorporation has prepared the draft financials of Soft Bharati Private Limited for the year ending 31st March 20X2. So you are given the P&L, you are given the balance sheet. Balance sheet, it starts off with equity and liabilities and then it moves on to assets. So therefore, this is not as per division 2. Not as per division 2, schedule 3. Division 2, schedule 3, it is the Ind AS format which we have to follow. Same goes for the P&L. There is no other comprehensive income. So not as per division 2, schedule 3. Okay. Additional information of Soft Bharati Private Limited. DTL of 6,000 is created due to the following temporary difference. Difference in depreciation amount as per income tax and accounting profit. There is only one PPE, one item of property, plant, equipment in the company whose closing balance as at 31st March 20X2 is as follows. As per the books, that means this is your carrying amount, 1 lakh. This is your tax base. So tell me, carrying amount is greater than the tax base of an asset. So what should be created? Yes, Jeannie, what should be created? Deferred tax liability. Because in the future, you will utilize 80,000 of your asset value under the income tax for the taxable profits that this asset will be generating. So therefore, you create a DTL. And that is already created here. That is already created here. So 6,000 divided by 20,000, if I do, this comes to 30%. This comes to 30%. Are you able to follow? Yes, this comes to 30%.
Yes, sir.
So therefore, the tax rate is 30%. They have not directly given, but we can derive it. Okay. Therefore, tax rate is equal to 30%. Pre-incorporation expenses are deductible on a straight line basis over the period of 5 years as per income tax. However, the same is immediately expensed off in the books. So that means what? This will again give rise to a deferred tax adjustment. And now we have the tax rate also. So I cannot say that I will not do a DT, deferred tax adjustment. I will have to do it. Current tax is calculated at 30% on PBT without doing any adjustments related to income tax. The correct current tax after doing necessary adjustments of allowances or disallowances related to income tax comes to 1,25,700. So will you take 3,55,000? That is exactly what they have done. If you see, their profit before tax is 3,55,000. On that, okay, what are you going to take?
Sir, we will take 125,700 after adjustment amount.
That's so 1,25,700 is what you will take. So therefore, this adjustment has to come there. After the reporting period, the directors have recommended a dividend of 15,000 for the year ending March 20x2, which has been deducted from reserves and surplus. Dividend payable of 15,000 has been grouped under other current liabilities along with other financial liabilities. Should I make a provision for this or should I just keep it as a disclosure?
Sir, I think we should keep it as a disclosure
Yes.
because it
But
is only क्या बोलेंगे
proposed.
proposed. Yes,
सिर्फ प्रपोज किया है डायरेक्टर्स ने है ना
yes, sir.
इट्स नॉट अप्रूव्ड बाय द शेयर होल्डर्स ठीक है
Yes,
तो
sir.
ओनली डिस्क्लोजर नो अकाउंटिंग एंट्री टू बी डन so whatever they have done we will have to remove that. There are government statutory dues amounting to 15,000 which are grouped under other current liabilities. This is a classification issue. This is a reclassification. So this would be a non-financial liability. Though it is payable in cash, if you remember financial liabilities, these are contracts. And clearly in the definition of financial liabilities, payments to the government are excluded. So therefore, this is a non-financial liability. We will be disclosing it as such. Non-financial liabilities. That's it. So if it is under other current liabilities, no reclassification needed. No reclassification needed. Okay, all right. The capital advances amounting to 50,000 are grouped under other non-current assets. Capital advances. What do you mean by capital advances? You have given money and in return you are expecting a capital asset. Is it a financial asset? Is it a financial asset? फाइनेंशियल एसेट इज अ राइट टू रिसीव कैश यहाँ पे आपको कैश नहीं मिलेगा यू वोंट गेट कैश हियर व्हाट आर यू गोइंग टू गेट यू आर गोइंग टू गेट एन
Capital advance.
yes so you are going to get an asset so therefore any reclass needed answer is no reclass let it remain under other non-current assets all right next other current assets of 51,000 comprises of interest receivable from trade receivables. So other current assets of 51,000. So what are you going to do? This is interest receivable. I think you should be getting it in cash. You can do a reclassification. Current investment of 30,000 is in shares of a company. They are talking about this one. Is in shares of a company which was done with the purpose of trading. Current investment has been carried at cost in these financial statements. The fair value of current investment in this case is 50,000 at 31st March 20x2. So tell me one thing, is this a financial asset? Is this a financial asset? Answer is yes. Is it investment in equity? Answer is yes. If it is investment in equity, which,
Yes.
which method will you follow? FVTPL. FVTPL. So you will recognize the fair value of the asset of the investment and take the hit to take the movement to your P&L. And will it give rise to a deferred tax implication? Answer is yes. Answer is yes. 10th, actuarial gain on employee benefit measurements of 1,000 has been omitted. Actuarial gain on employee benefit measurement, Ind AS 19, has been omitted in the financials of Soft Bharati Private Limited for the year ending 31st March 20x2. The financial statements for financial year X1, X2 have not yet been approved. Required to ascertain whether the financial statements of Soft Bharati Private Limited are correctly presented as per applicable reporting framework. If not, prepare the revised financial statements of Soft Bharati Private Limited after the careful analysis of mentioned facts and information. Okay? So, shall we start? What we need to do is we will basically go around and give our effects to the adjustments. Preparing the balance sheet and the P&L is then thereafter going to be only a format. Is going to be only a format. Anyways, so let us start off. First one, adjustments 1 and 2. Do we need to do anything out of that? Adjustments 1 and 2. Do we need to do anything? We have already done. We have already calculated the tax rate. उसके
Tax
अलावा
percentage, sir.
yes. So apart from that, nothing is there. So let us move on to the next one. Pre-incorporation expenses are deductible. Pre-incorporation expenses are deductible on a straight line basis over the period of 5 years as per income tax. Achha. But do we have to do a deferred tax adjustment for this? Do we have to do a deferred tax adjustment for this? Answer is yes. You will have to do a deferred tax because the book value is different. The tax base is going to be different. Okay, so just let us quickly look into that. This is case study 5. Okay, now let us come on to particulars, carrying amount, tax base, difference, tax at the rate of 30%. Okay, all right. So first thing, of course, we have property, plant, equipment, carrying amount 1 lakh, tax base 80,000,
1,000.
difference
20,000.
yes. So ये मिला के बन गया आपका DTL. ठीक है। नेक्स्ट, इनकॉर्पोरेशन एक्सपेंसेस। अच्छा, what is the carrying amount in the books? What are they saying? 30,000 for incorporation expensed. Yes, 30,000 is fully expensed. Yes, is this treatment correct first of all? Should I capitalize 30,000? Should I capitalize 30,000 in the books? Or is the treatment correct where it is fully expensed?
No, sir.
Fully.
We should capitalize it.
नहीं, आप कैपिटलाइज नहीं करो। क्या बोल के आप कैपिटलाइज करोगे? What is the asset that it is giving? This is like आपने कंपनी सेक्रेटरी को हायर किया, he prepares the articles of association, memorandum of association, ROC के पास जाके name application for name file करता है, then once the name is confirmed he takes
Yes,
the
yes, sir.
signatures and then he just gives it to the ROC. ROC सारी चीजें वेरीफाई करने के बाद confirms that okay your company is incorporated, ये रहा certificate of incorporation. So this is the entire thing for
Yes.
which we are paying 30,000 rupees. अभी इसमें एसेट कौन सा बन रहा है? There is no asset that is getting created out of this. Okay. So therefore, it should go to the P&L. Fundamentally, Ind AS 38 tells that you can capitalize as an intangible only if there is an asset. And what is an asset? It is a resource that gives economic benefits in the future. It is a resource that gives economic benefits in the future. This 30,000 is not going to give me any economic benefits in the future. It has already given you the benefit right now कि जो company था वो बन गया आपका. Yes, you have formed the company. So therefore, there is no asset that gets created. So in my books, it is entirely expensed out.
Expensed off. Yes.
So carrying amount is going to be zero. Carrying amount is going to be zero. है ना?
Yes, sir.
Tax base कितना होगा? टैक्स में क्या हो रहा है? Pre-incorporation expenses are deductible on a straight line basis over a period of 5 years. So tax base in the tax records, this will get capitalized 30,000 and every year I will allow 6,000 rupees. 5 years they said, na? So 30,000 divided by 5, 6,000 rupees. Yes or no?
Yes, sir.
So therefore, at the end of year 1, I would have written off 6,000 in tax.
Yes, sir.
So now what
Now
would
we
be
will consider 24,000.
24,000. So difference is 24,000. So incorporation expenses, carrying amount is lower than that of the tax base. So this gives rise to a
DTA.
DTA. So 24,000 into 30%, 7,200. 7,200. Is it okay?
यस सर एक्चुअली इंड एस 38 का मैं एक्चुअली भूल गई थी थोड़ा इसीलिए
कोई बात नहीं, हम है ना।
थैंक यू
अब
सर
तो है। ठीक है, कोई बात नहीं। Current tax is calculated at 30% on PBT without any adjustments. The correct current tax after the necessary adjustments relates to income tax, relate after adjustments of allowances or disallowances related to income tax comes to 125,700. So what are you going to do? Your tax expense here is not going to be 1,06,500. It will be 127,500. वही है ना? 125,700. Sorry. Do you agree with this?
Yes, sir.
Yes. All right. Fine. So that takes care of current tax. Okay. After the reporting period, the directors have recommended a dividend of 15,000. ठीक है. So ये dividend I should not account. I should only give a disclosure.
Disclosure.
So this is already accounted. मतलब P&L में already 15,000 is less. Yes or no?
Yes, sir.
So we will have to add 15,000. We will have to add 15,000. Correct? Yes or no?
Yes, sir.
Adjustment fine. 15,000. And this 15,000 we will have to remove it from other current liabilities. Adjustment 5. Correct? Then only then the double effect will happen. So they said it is included in other current liabilities. Correct? It's grouped under other current liabilities. So I removed it from other current liabilities and I added it to reserves and surplus. I just gave a reverse entry impact. Is it okay?
Yes, sir.
Achha, theek hai. So now coming on to the next one. There are government statutory dues amounting to 15,000 which are grouped under other current liabilities. Okay, so this is adjustment number 6. Now, so 45 minus 15 is left with 30. Correct? Now,
Yes.
this 30 में से other current liabilities is 15,000. This is statutory dues. And 15,000 will be financial liabilities. Yes, 15,000 will be financial liabilities. Are you okay?
Yes, sir.
What is to be paid to the government is not a financial liability because it's not it's a contract with a it's not a contract, it's basically paid to the government, which is excluded from Ind AS 109. So other financial liabilities 15,000. Next. So adjustment 6 is done. The capital advances amounting to 50,000 rupees, amounting to 50,000 are grouped under other non-current assets. Other non-current assets, 50,000. Adjustment 7. Adjustment 7. Anything is to be done here? Answer is no.
No,
Nothing
sir.
is to be done. वो 50,000 है, वो 50,000 सही है. Okay, all right. Other current assets of 51,000 comprise interest receivable from trade receivables. Interest receivable from trade receivables. Okay. So, adjustment. Interest receivable. Where will it go? It is a right to receive cash.
Financial.
Asset. Financial asset.
Sir,
Yes.
actually, यानी क्वेश्चन का आंसर देते हुए इतनी घबराहट क्यों?
इसलिए यहाँ तो मत डरो. ओके, इट्स नॉट नीडेड.
एक्चुअली ये क्वेश्चन करते हुए अभी आप जो क्वेश्चन कर रहे हो तो उसके अंदर इतना यानी इतना हार्ड नहीं है
कुछ है ही नहीं.
करना.
This question has only reclass adjustments. That's it.
Yes,
And
sir.
a little bit of deferred tax. Maybe the size of the question is scary. That's it. Okay. But otherwise, if you see the question, what I'm doing, I'm reading and then we are identifying that this should not go there, that should not go there, this should go here, this should go there. That's it. ओके,
Yes, sir.
इवन देर इज एक और क्वेश्चन है इसके बाद कि मोस्ट ऑफ द फाइनेंशियल रिपोर्टिंग क्वेश्चंस आर ऑल वेरी मच बोरिंग एंड वेरी सिंपल. इट्स जस्ट दैट ठंडे दिमाग से सोचना पड़ेगा. ओके, आई थिंक दैट्स ऑल दैट्स रिक्वायर्ड.
यस सर, एक्चुअली यानी आंसर आता भी है ना, फिर भी जब यानी क्वेश्चन आता है सामने से तो दिमाग
That's right.
एकदम.
You panic, which is not required, right? Which
यस
is
सर.
not required at all. At least here it is not required. Okay. Exam also, when you don't panic and then when you get into that stage, automatically in the exam also, you will be cool and you'll be able to understand whatever is being, whatever is asked from you. Okay.
यस सर.
All right, fine. Next, other current assets of 51K comprises of interest receivable from trade receivables. ठीक है, this is done. Next, current investment of 30,000 is in the shares of a company which was done with the purpose of trading. Current investment has been carried at cost in the financial statements. The fair value of current investment is 50,000 as at 31st March 20x2. ठीक है. So 30 should become 50. That means there is an upward increase in your fair value through in your P&L. Yes or no?
यस सर.
So add 20,000. This is adjustment 9. Correct?
यस सर.
Acha. Will this have a deferred tax implication?
यस सर, इट विल हैव.
Yes. तो यहाँ पे आएगा आपका
करंट इन्वेस्टमेंट
current investments. Carrying amount,
50,000.
tax base,
30,000.
difference 20.
20,000. एंड
20
टैक्स
क्या रहेगा?
6,000 deferred tax liability सर.
Perfect. Deferred tax liability. I think इसके अलावा there is nothing that is having deferred tax implication. Okay. So 6,612 minus 7, 4,800 is your net DT. Okay.
यस सर.
So you come to your P&L. This will not be 6,000. This will be 4,800. So this impact we have given. Next, come to reserves and surplus. Here your investment adjustment 9. This will get added. So plus 20,000. Plus 20,000. Correct?
यस सर.
All right. ये हो गया current investments. ठीक है. Next. Actuarial gain on employee benefit measurements of 1,000 has been omitted in the financials. अच्छा, actuarial gain, where does it go? Ind AS 19 याद करो. We studied change in actuarial assumptions, right? We studied change in actuarial assumptions, है ना?
यस सर.
Okay. So your change in actuarial assumptions will go to other comprehensive income. Do you remember? Because this is something which is not in control of the entity. Okay.
यस सर. यस सर.
One index. What is the percentage of benefit change in? Yes, we had done this question. Remeasurements to OCI. Following items are remeasured in OCI without reclassification. Actuarial gains and losses goes to your the other comprehensive income. And we had done this question number 13. If you can recollect, yeah,
Yes, sir.
proof के साथ रखते हैं, है ना? Question 13. We saw the movement, and this we have taken the actuarial loss of 28,430 in this to the other comprehensive income. It was an actuarial loss here. So that is why it went to OCN. So therefore, in this case, actuarial gain, we have to take it to OCI. Acha. When I take things to OCI, the related tax impact also will go and sit in other comprehensive income. For instance, if I take 1,000 as an expense to other comprehensive income, it will have a tax impact of 30% on that. It will have a tax impact.
एक बार वापस से बोलेंगे प्लीज?
एक मिनट ना, मैं बोलता हूँ, सिर्फ ऐसे नहीं बोलूंगा.
यस.
Prescribe the accounting treatment, accounting for current and future tax consequences. Transactions and other events of current period that are recognized in an entity's financial statements. Transactions and events recognized outside P&L. So ये जो मेरा 1,000 का इफेक्ट है, the 1,000 actuarial loss which is hitting the other comprehensive income, it is outside the P&L. Where it is in other comprehensive income. So where will the related tax impact go? The related tax impact will also go and sit in other
comprehensive
income. Okay. This is where it will go and sit. Acha, will it have a tax implication? Definitely. When you are putting in your expense in the P&L, obviously it will have a tax implication. It will have a tax implication. है ना? So therefore, you are going to take that tax adjustment into your other comprehensive income. That's it. So in your P&L, OCI will be actuarial gain. It's a gain. Less tax on account.
tax on 300 rupees.
Yes. So your net actuarial gain is 700. Your net actuarial gain is 700 rupees. Okay. Did you follow?
Yes, sir.
All right. So now coming to your, I think everything is done, right? इसमें और कुछ बचा नहीं है. Yes. So financial statements have not yet been approved. So we have done everything. So what I want you to try out is, you can maybe try it out right now, but the P&L, we have almost covered everything. There is nothing that is left. So 3,55,000 tha, this will become 3,75,000 because 20,000 got added as a fair value upward adjustment. 125,700, 4,800 is going to be your deferred tax expense. So therefore, your net income is going to be 3,75,000 minus 125,700 minus 4,800. So 244,500.
44,500.
And then इसके अलावा आपका क्या होगा? Plus 700 other comprehensive income, है ना? So your total comprehensive income is going to be 244,500 plus 700, 2,45,200. 2,45,200. Are we okay with this?
Yes, sir.
This total comprehensive income. See, in IFRS, we have total comprehensive income. In Ind AS, they have just modified. They are saying we'll keep the P&L separate, we'll keep the
Yes,
OCI separate, and we'll show them separately. We'll show them separately. Okay. So you need not actually show it as a single item of total comprehensive income. आप उसको ignore कर सकते हो. Okay.
yes, sir.
दिखाया तो भी चलेगा, देयर इज नो प्रॉब्लम, बट द हेडिंग जो रहता है, you will have to give a statement of profit and loss and other comprehensive income. Okay, because our investors and all, they are more comfortable with seeing the P&L rather than seeing statement of total comprehensive income. Ultimately जाएगा आपके reserves and surplus में यही figure,
Yes,
2,45,200.
sir.
ठीक है, so that takes care of the P&L. Now coming to your balance sheet, obviously you will start off with your property, plant, equipment, that is your assets. So your PPE is going to remain at 1 lakh. We don't have any adjustment. Long-term loans and advances will remain at 40,000, no adjustments. Then your other non-current assets will remain at 50,000, no adjustments. Current investments, 30,000 is going to become how much?
50,000, sir.
50,000 by virtue of adjustment. Then you have your inventories, which will remain at 80. Trade receivables, no adjustment, remains at 55. Cash and bank balances, no adjustment, 1,15,000. Other current assets, no adjustments, 51,000. So that is your asset side. When you come on to the liabilities side, share capital, 1 lakh. Reserves and surplus is going to be
45,200.
245,200. First year है, opening reserves will be 0. This thing will get added to it. Next, long-term provisions.
प्रोविजन में सर हम माइनस कर देंगे 1,000 रुपीज.
Yes. Adjustment 10. Okay, so 24,000. Deferred tax liabilities. बहुत सारे एडजस्टमेंट्स. एडजस्टमेंट 1, एडजस्टमेंट 3, एडजस्टमेंट 9, एडजस्टमेंट 10. Adjustment 1, 3, 9 and 10. So the total deferred tax will be how much?
Sir, it is 4,800. We have calculated
4,800 we have
DTL
calculated,
and 700 from.
not 700, 300.
Sorry, 300.
300 है ना?
Yes, sir.
4,800 plus 300. Okay. 5,100. Okay.
Yes, sir. Yes,
That
sir.
is the deferred tax, because income tax may the tax base is 0. You don't record actuarial movements in income tax, so that is 0. Carrying amount is what you're having as 1,000. So the differential of 3,000 into 30%, 300 is actually nothing but your deferred tax liability. है ना? So 5,100 is your DTL. Coming next to trade payables, no change, 11,000. Other current liabilities, we will be splitting this into 15,000 financial liabilities, 15,000 other current liabilities. Are we okay with this?
Yes, sir.
Okay. Next, short-term provisions. It won't, this is provision for tax, which is nothing but adjustment 4. So this comes to 125,700. 125,700. Okay. With that, I think we are done. You can total up and check whether it matches or not. 1 lakh 40, 50, 1 lakh 90, 2 lakh 40, 3 lakh 20, 3 lakh 75, 4 lakh 75, 4
Sir,
lakh
it is
90,
5,41,000.
5 lakh 41,000. लायक चेक कर लो.
Yes, sir, it is also 5,41,000.
41,000. Perfect. So what are you going to do from your end? Just draw the balance sheet in that format and prepare and finish it off. Okay.
Yes, sir.
So that closes case study 5. Okay. So I think we have done all the case study questions, hai na? Mumbai challenges we did yesterday. Then we also did Neelanchal Gas Refinery Limited. Okay. So quite a bit of case studies, I think all are done from my side. Yeah. This also we did yesterday, impairment testing for goodwill. Mhm. Yep.
सर,
Okay.
आपने कल होमवर्क में कुछ क्वेश्चन दिए थे.
इसमें आज डिस्कस कर लेंगे.
यस सर.
यस.
सर, एक क्वेश्चन मुझे पूछना था कि यानी जो होमवर्क के जो क्वेश्चन आंसर्स हैं उसमें जो आंसर्स लिखे हुए हैं वो यानी काफी लंबे लंबे लिखे हुए हैं, तो यानी उतना ही लंबा हमको भी लिखना चाहिए या फिर
देखो, if you look at the answers which are given here, they are referring to para numbers. They are
यस
referring to very detailed solutions because that is a standard that they give. Of
यस
course, you are not expected to remember para numbers, number one. You are not expected to write the same language. Okay? If
यस
you
सर.
write, it does create an impression, but it's not the benchmark. Matlab, it's not practical, it's not expected also. But yes, if you write the basic principles in your own words, it is more than sufficient. You will get your answers. The whole point is when these case study questions come, you should be in a position to mention what the standard wants or what is the provisions which are there in the standard. What has happened in the question and what is the conclusion. What has happened, what should have happened, and how are you going to rectify, or how are you going to amend, or how are you going to record it. Okay? So these 3-4 things have to come in your answer. And they can be in your simple language also. That is also fine. That is also fine. Okay?
यस सर.
So थोड़े answers बड़े होंगे. You will have certain long answers in this particular chapter. Okay?
Yes, sir. Actually, in the first question, I have read and solve it. I have written solution and यानी जब मैंने आंसर देखा तो वो 2 पेज
बहुत
का
लंबा था
आंसर था.
बहुत. हाँ, बट आपका आंसर शायद हाफ
मेरा
पेज में कंप्लीट
आधे
हो
एक
गया.
पेज में ही कंप्लीट हो गया सर.
So that's okay. See, largely, it's very difficult to say that institute expects verbatim answers. Okay, वो
Yes,
नहीं
sir.
होता है. It's not required. But you will have to frame your answers depending on कितने marks का question है. If it is probably this question would have come for 16 marks, it won't come. But if it comes, you will need to write it in that fashion. If it is something like a 6 to 8 mark question, I think that's fairly uh,
Okay.
sufficient, whatever you have done. Okay. So
Okay, sir.
we shall go through one more question that deals with preparation of financial statements.
Yes, sir.
And then we shall come to your homework questions. Okay.
Okay, sir.
So then I think it kind of closes up our discussions for today. Master Creator Private Limited, a subsidiary of a listed company, is an Indian company to whom Ind AS are applicable. Following draft balance sheet is prepared by the accountant for the year ending March X2. Assets, you have non-current assets, property, plant and equipment. Financial assets, you have other financial assets, which is security deposits, other non-current assets, that is your capital advances. Deferred tax assets, trade receivables, inventories, financial assets, you have investments and other financial assets, and cash equivalents, giving you total assets. Equity and liabilities, you have equity capital. Non-current liabilities, you have other equity, deferred tax liability, borrowings, long-term provisions. Current liabilities, you have financial liabilities, other financial liabilities, trade payables, and current tax liabilities, giving you total equity and liabilities. Okay. Now, on 1st April, 8% convertible loan with a nominal value, this is asset which date? 31st March X2. Okay. On 1st April 20X1, 8% convertible loan with a nominal value of 64 lakhs was issued by the entity, redeemable on 31st March also at par. Alternatively, it may be converted into equity shares on the basis of 100 new shares for each 200 worth of loan. An equivalent loan without conversion option would have carried interest at 10%. Interest of 5,12,000 is already paid and included as a finance cost. Present value rates are as follows. For 8% you have, for 10% you have. Okay. So we will have to, how did they calculate 5,12,000? Just check. Yes. 5,12,000. So what have they done? 64 lakhs loan value into 8%, 5,12,000. Have they followed Ind AS 109? That means, have they followed Ind AS 109?
No, sir.
Because Ind AS 109 requires finance cost to be calculated based on effective interest rate,
Yes.
not on the coupon rate. So they have not followed. That means they have not done the split accounting between equity and liability. So that split we will have to do and take care. Okay, so that is one thing. After the reporting period, the board of directors have recommended a dividend of 50,000. The same has not yet been accounted by the company. So is it okay, or should it be accounted?
No, sir. It,
Treatment is, bolo?
sir, it is not, we will
We will account it, or we will only disclose?
only disclose, sir.
So company has not accounted, मतलब सही किया है ना?
Yes.
Yes. तो ट्रीटमेंट इज करेक्ट. कभी कभी इंस्टीट्यूट सही एडजस्टमेंट देता है, राइट? आपको
Yes,
बोलना पड़ेगा कि ये एडजस्टमेंट सही है, राइट? So
yes, sir.
treatment is correct, only disclosure needed. Okay. Other current financial liabilities consist of the following: wages payable, deliver cash, financial liability; salary payable, financial liability; TDS payable, other current liabilities. It is payable to the government. Even though it is cash, it's payable to the government. It's excluded from the scope of financial liabilities. Interest accrued on trade payables is a financial liability. Okay, next. PPE consists of the following: land, building, vehicles, factory premises. Building for administration purposes, land for capital appreciation. So this becomes an investment property. Next. Vehicles used as conveyance for employees. Factory premises. The construction began on 31st March X2. No depreciation has been charged on it. The construction activities will continue to happen, and it will take 2 years to complete and be available for use. Composition of other current financial assets is as follows: interest accrued on bank deposits, prepaid expenses, royalty received from dealers. Okay. So, interest accrued on bank deposits. What is the categorization? It's a right to receive cash, financial asset. Prepaid expenses. What is it? Is it a financial asset? Prepaid expenses. Is it a financial asset?
No sir.
नहीं. It is an other current asset. Royalty receivable from dealers is a financial asset. Okay. Current investments consist of securities held for trading, which are carried at fair value through P&L. Investments were purchased on 1st Jan 20X2 at 55,000 and accordingly are shown at cost as at 31st March X2. The fair value of said investments as on 31st March 20X2 is 60,000. Okay, so we will have to do this adjustment. We will have to do this particular adjustment. Next. Trade payables and receivables are due within 12 months. Current. No change in equity.
एक्सक्यूज मी सर.
बोलिए.
सर एक्चुअली एडजस्टमेंट 6 एक बार वापस से रीड करेंगे. वो क्या था ना, वो कल वाला प्रॉब्लम आ रहा था इसीलिए.
ये वाला.
हाँ, करंट इन्वेस्टमेंट.
Current investment consists of securities held for trading. Okay.
यस सर.
Carried at fair value through P&L. Investments were purchased on 1st Jan 20X2 at 55,000 and accordingly are shown at cost. So if you look at the balance sheet, आपने कितने में लिया? 55,000 and it is appearing at 55,000. Correct?
Yes, sir.
But what is the fair value of the said investments is
60,000.
So you will have to obviously add. Yes or no?
Yes, sir.
Adjustment 8 plus 5,000. Okay?
Yes, sir.
Yes. All right. Entity has the intention to set off a deferred tax asset against a deferred tax liability as they relate to income taxes levied by the same tax authority, and the entity has a legally enforceable right to set off taxes. That we will obviously do. Other equity consists of retained earnings only. Opening balance is given to you. Okay. No dividend is actually paid by the company during the year. Assume that deferred tax impact, if any, on account of above adjustments is correctly calculated in the financials. So assume that जो भी हुआ है for deferred tax, that is correctly calculated. Being the finance and accounts manager, required to identify the errors and misstatements, if any, in the balance sheet of Master Creator Private Limited and prepare the corrected balance sheet with details on the face of the balance sheet. That is, no need to prepare notes after considering the additional information. Provide necessary explanations, workings for the treated items wherever necessary. Okay. So that is your question. Is it very difficult?
No, sir.
नहीं ना. तो एक काम करो. Take 10 minutes.
Yes, sir.
Take 10 minutes. You don't sit and prepare the whole question. What you can do is, here itself, you can go on giving, just say in the previous question, I gave at the side whatever should be the values. No? So try to populate those values and try to fill up these comments. Is it okay? These
Yes, sir.
values towards the left. Up, try karo. You
Hmm.
take 5 to 10 minutes. Today there is a lot of time to solve these questions. Okay, so you take this time and then maybe we can, I will just intervene after about 10 minutes to see that it's all done. Then we can move on to the homework questions that I gave yesterday. Okay,
Okay, sir.
so
Okay.
take 10 minutes. आपके पास module है ना?
Yes, sir, I have.
You have the module. Okay, so try to do this question, then we shall continue. Okay.
Okay, sir.
Okay. Okay, we can start. So property, plant, equipment, we have some adjustments coming in here. Adjustment 4. Note 4. Okay. So this one, it actually comprises of building, land, vehicles, and factory premises. So your property, plant, and equipment is actually going to be building plus vehicles. So that comes to 3750 250 plus 1237 500. So PPE 4987 750. Investment property 1548 150. And CWIP is going to be 2001 600. So we need to give this split because we cannot put everything in property, plant, and equipment. So this one goes in as PPE 4987 750. Then you have investment property, which is 15.
15,48,150.
Yes, 1548 150. And CWIP of 2001 600. Okay. So you need to give this bifurcation. You need to give this bifurcation. Okay, fine. No adjustments to security deposits. This shall continue as it is 4,62,500. Other non-current assets, which is your capital advances, no adjustment 1733,480. Next. Next. Deferred tax assets will become zero because it will be netted off entirely with deferred tax liability. Okay. So 4,74,850, 254, 150. So 2,20,700. Deferred tax के बारे में they have mentioned something. Adjustment 9. So they want to set it off, and adjustment 12. So we don't have to calculate deferred tax separately. So notes 9 and 12. Note 9 and 12. 2,20,700 will be your net deferred tax liability. Okay, so next one. Trade receivables, no adjustment. This continues at 7,25,000. Inventory, of course, the formatting has to change. You need to bring in financial assets separately. Classify as financial asset. Okay. Next. Investments will come at 60,000. Other financial assets. Okay. So here, financial assets. Okay. So this has to be split. This is note.
Note 5, sir.
Other current assets, 90,000. Yes. So your total assets 124, 50, 850. Did you get this?
Yes, sir.
Sure. Good. All right. Equity share capital, there won't be any change. So 10 lakhs. Next, other equity, there is going to be a change. Borrowings, there is going to be a change. So let us calculate that impact because this borrowings is at the face value. So we need to calculate the impact. Okay, fine. Have you calculated?
Yes, sir.
Okay. So it is redeemable on 31st March. Loan of, okay. So that becomes your working. So compound financial instrument.
Their financial liability is 59,75,040.
Okay. Okay. So let us see.
Yes, sir.
Liability component. Okay. Proceeds is equal to 64 lakhs, which will be split into liability component and equity component. Okay. So your liability component will be
59 lakhs. Oh, sorry.
64 lakhs. आप क्लास में हो, आगे के बच्चे क्लास में नहीं रहेंगे. 64 lakhs into 8% into present value annuity factor. Market rate क्या है?
10%, sir.
10%.
10% for 4 years.
4 years, no?
Yes.
Yes. 4 years plus 64 lakhs redeemable at par into present value factor 10% for the fourth year. They have given the rates, right? So 0.91, 0.83, 5, 6, 3.17. So this comes to 59,75,040 minus 59,75,040. 424,960 is your equity component. Okay, so we need to give this impact in the financials. Yes, and amortization table. Value at 31st March 20x2. 59 lakh 75,040 plus interest at the rate of 10% minus coupon at the rate of 8%. Correct, no? This comes to 5,97,504 minus 5,12,000. 60, 60, 544. Is it okay?
Yes, sir.
ये मिला था आपको?
Yes, sir.
Okay, very good. So if you come to your liability, 64 lakhs is actually 60, 60, 544. 544. Next. Obviously, other equity must go to equity and liabilities. 25 lakh 150 plus what is the equity component? 424,960. Okay. Now they have already recorded the interest. That means how much of interest they would have recorded? They would have recorded 5,12,000 in the financial statements. But actual interest should have been 597,504, correct?
Yes, sir.
So therefore, the excess interest that needs to be expensed is 85,504. Yes or no?
Yes, sir.
Is equal to this you had done. 85,504 ये बनाया था आपने, समझा क्या?
यस सर, यस सर।
ओके, बट डिड यू डू दिस एडजस्टमेंट?
सर एडजस्टमेंट बाकी
Okay. So 85,504 has to be reduced from reserves and surplus. Correct?
है। यस सर।
So that is one adjustment. Okay. ये हो गया. Next. Investments, we are adding 5,000, right? As a fair value adjustment. है ना? Adjustment.
यस सर, एडजस्टमेंट 6।
So उसका 5,000 also will come here as a second adjustment, second effect. Investment value increases,
यस यस यस
so
सर।
profit should increase. So reserves and surplus also will go up by 5,000. Correct? So other equity will be 28,44,606. Long-term provisions, no adjustment given, same values will continue. Financial liabilities, trade payables also are financial liabilities. So 200,564 will continue as it is. Trade payables will continue as it is. Other financial liabilities है ना. Financial liabilities. Note 3. Twenty-one eight 61,845, 35,564, 119,290. 10. Other current liabilities 81,265. Trade payables 669, 180, no adjustments. Current liabilities for tax 124. हो गया? Done?
यस सर।
So that closes this question. No P and L, right? No P and L. Okay. So that kind of closes the question from all respects.
सर एक्चुअली मेरा सिर्फ एक चीज में गलती हो गई, वो जो टैक्स का इफेक्ट देना रह गया अदर इक्विटी में।
कौन सा टैक्स?
आपने जो अभी कैलकुलेट किया था ना।
85,000.
यस सर।
That is not tax. That is increased financial charge.
Sorry. Yes.
Excess interest to be recorded. Yes. Excess interest to be recorded. Okay, 85,000. बस यही है और कुछ नहीं. Good. Still it's good. Yes. Okay. All right. So that closes question number 5. Okay. Now, next, let us run through the uh, questions which I gave you for homework. Okay. Ooh. Okay. So question number 1. Venus Limited is a multinational entity that owns 3 properties. All the 3 properties were purchased on 1st April X1. The details of purchase price and market values of the property are given as follows. So property 1 is a factory purchase price 15,000, market value 16, life 10, subsequent measurement cost model. Property 2, they are going ahead with a factory, a revaluation model. Property 3 is let out, they want to follow the revaluation model. Property 1 and 2 are used by Venus Limited as a factory building, while third property is let out to a non-related party, at market rent. The management presents all the 3 properties in the balance sheet as property, plant and equipment. Company does not depreciate any of the properties on the basis that the fair values are exceeding the carrying amount, and recognize the difference between the purchase price and fair value in the profit and loss. Analyze whether the accounting policies are in line with Ind AS. If not, advise the correct treatment. Okay. So tell me, what is the company doing? सबसे पहले factory building, property 1, it is taking the cost model. Second case, factory building only, it is taking the revaluation model. Third case, a let out property, it is again taking the revaluation model. Now, can I tell that property 1 and property 2 is for the own use of the entity? Yes, it is for the own use of the entity. Property 3 is let out. So can I call it as investment property?
Yes, sir.
ये हो गया मेरा investment property. Now, can I say that property 1 and property 2 are the same class of assets?
Yes, sir.
अच्छा, तो ये हो गया मेरा same class of assets. Now, if it is the same class of assets, can I have a different model for property 1 and property 2?
No, sir. As per Ind AS 16, for same class of asset, we should use the यानी एक ही मेथड अपने को यूज करना चाहिए.
यूज करना चाहिए. So I can either follow the cost model or the revaluation model, but it has to be both, for both. I cannot use one cost model and one revaluation model. So that is wrong. So therefore, it has to use only one model, number 1. Second, the company does not depreciate any of these properties. So property 1, 2, 3, nothing is depreciated on the basis that fair values are exceeding the carrying amount. Can they do that?
No, sir.
You have to depreciate whatever be the issue. And finally, it recognizes the difference between the purchase value and the revalued amount in P&L. Can you recognize it in the P&L?
Sorry, sir.
This difference between the purchase price and the market value, it is recognizing this difference between the purchase price and the fair value in the statement of P&L. Can it take it to the P&L?
No, sir. It is
OCINR.
yes.
Yes, that's right. It should go to OCI and from there to your revaluation reserve. It ultimately flows into your revaluation reserve, where you are following the revaluation model. Okay. And this is a non-reclassifiable OCI. So now, what are you going to do? You have two options. Either you follow cost model for property 1 and property 2 together. So option 1, cost model for property 1 and 2. And in the third case, you can follow the revaluation model. Or you can follow the cost model here also. Property 3. Acha. For investment property, can I follow revaluation model?
No,
No.
only fair value disclosure is needed.
Yes. So यहाँ पे चलेगा only मेरा cost model. Here you will be having only the cost model. You cannot follow the revaluation. This is a carve out from IAS 40. IAS 40 is your international standard, IAS 40. IAS 40 allows you to record the movements in the fair value. It allows you to take the fair valuation in the books for the purpose of accounting. And not only that, it allows to take the difference between the cost and the fair value straight away in the P&L. It does not require you to take it to revaluation, to take it through revaluation reserve. It tells for investment property, you take the movement directly to P&L, or you can follow the cost model. So that is one carve out that Ind AS has done. They have removed the fair valuation model for investment property, but the disclosure is required. Okay. So option 1, cost model for property 1 and 2. And for property 3, that anyways goes in at cost. Or for the option 2, revaluation model for properties 1 and 2 and cost model for property 3. Are we able to understand?
Yes, sir.
Yes. तो जब revaluation होगा, तो revaluation model, it will come at 16 plus 11, 27,000. Okay. Yes or no?
Yes, sir.
Yes, sir.
Reval model 16 plus 11, 27K. And this will be at, investment property will be at 12,000 minus 1 year's depreciation, 12,000 by 10 years. So that comes to 10,800. Whereas in the first case, property 3 will anyways come in at 10,800. In the first case, the cost model, this is going to be 15,000 divided by 10 years, that 1,500 will be the depreciation. Second case, another 1,000 will be the depreciation. So therefore, this will be 13,500 plus 9,000.
9,000.
So 13 plus 9, 22,500. Are you able to follow?
Yes.
So that completes question number 1. Are we okay?
Yes, sir.
Yes, sir.
कोई बात नहीं. Next, question 1 is done. Then let's move on to question 2. Any doubts in question 1? No doubts?
No, sir.
Okay. So let's move on to question 2. Sun Limited, on 1st January 20x2, Sun was notified that a customer was taking legal action against the company in respect of financial losses incurred by the customer. The customer alleged that the financial losses were caused due to supply of faulty products on 30th September 20X1 by the company. Sun Limited defended the case but considered, based on progress of the case up to 31st March 20X2, that there was a 75% probability they would have to pay damages of 10 lakhs to the customer. However, the accountant of Sun Limited has not recorded this transaction in its financial statement as the case is not yet fully settled. The case was ultimately settled against the company, resulting into payment of damages of 12 lakhs to the customer on 15th May 20X2. The financials have been authorized by the board in its meeting held on 18th May. Analyze whether the accounting treatment made by the accountant is in compliance of the Ind AS. Okay. The accountant has not recorded this transaction as the case is not yet finally settled. Okay. Tell me, accountant of Sun Limited has not yet recorded. Is it right?
सर प्रोविजन करना चाहिए था 31st मार्च को.
Yes. Jeannie, do you agree?
Yes, sir. He should have provide the provision of 7.5 lakh as 75% probability is there.
Yes. So, as on 31st March, when he had prepared the financial statements, 10 lakhs into 75%, 7.5 lakhs provision should have been made in the books. Number one. Number two, am I getting additional information before the financial statements are approved? Yes. Financials are authorized on 18th May. But on 15th May, the settlement was done for 12 lakhs. The settlement was done for 12 lakhs. So therefore, should I increase the provision from 7.5 to 12 in the year ending 31st March 20X2?
Yes, sir.
Yes. So increase. Pooja?
सर उसका पेमेंट नेक्स्ट फाइनेंशियल ईयर में दिखाएंगे और उनका जो डिफरेंस है वो पीएनएल में तब लॉस बताएंगे, ऐसा नहीं करेंगे?
नेक्स्ट ईयर में क्यों दिखाओगे आप? यू आर having the information already before the financial statements are approved. तो ये एक तरीके से adjusting event हो गया ना?
Yes, sir. Yes.
Because the case was pending on 31st March, you got additional information about the settlement on 15th May, and 18th May the financials were approved. So you can take the impact on 31st March X2 and then you can send it for authorization to the board. Yes or no?
Yes, sir.
Increase provision to 12 lakhs. Increase provision to 12 lakhs. Any doubts here? No doubts, right?
Yes, sir.
Perfect. So this closes our question. Acha, there is one alternative opinion that is there. Okay. This is what the institute has given based on the probabilistic approach of 75%. But if you remember, provisions, we had talked about measurement of provisions. We had spoken 2-3 things in measurement. There are multiple probabilities for the values that you will have as an outflow. Yes or no? The cases can be multiple. Okay, that means you have multiple choices for the ultimate outcome. In that case, a probabilistic approach is going to work. In a court case, the probabilistic approach may not work because it is either you win or you lose. समझ में आ गया? Yes, did you follow? For instance,
Yes.
in this case, कहाँ गया यार? Analysis of financial statements. Yeah. So in this case, if there is a 75% probability to pay the damages, would he actually pay 7.5 lakhs or would he pay 10 lakhs?
10 lakhs.
Correct, na? Yes or no?
Yes, sir.
Both are convinced. Jeannie, you're convinced?
Sir, your voice has been stuck.
अच्छा. अभी भी? Even now, I think you
Hello.
can. Are you able to hear?
Hello, sir. My voice is coming to you.
Yes, yes, we are able to hear.
Your voice is completely audible, sir.
Okay, fine. Then I think Ginny, you can just log off and log in again. Okay?
Yes, sir.
Yeah, all right. So that's the point. So there are certain advocates. Let her come. Let us see if she has come. Otherwise, I'll have to explain again. Okay. Pooja joined. Good. आपने कल के क्वेश्चंस कर लिए पूजा?
सब पूरे नहीं हुए थे, बस रीडिंग हुई थी क्वेश्चंस की।
अच्छा, ये आज मॉर्निंग में वी डिस्कस दिस क्वेश्चन नंबर 5.
हाँ, ये किया था सर, ये समझा है।
ये किया है ना? तो इफ यू वांट यू कैन गो थ्रू ऑन द यूट्यूब आल्सो. ओके, बट वी जस्ट सॉल्व्ड दिस क्वेश्चन एंड वी आल्सो सॉल्व्ड द केस स्टडी वाला क्वेश्चन, सॉफ्ट भारती. ओके, so that is case study number 5, I think so. Okay,
यस।
so we did these two full-fledged questions. You can go through these questions in this thing.
यस सर।
Take Lena. Okay, so that's it. Jeannie, are you able to hear now?
Yes, sir.
Okay, okay. So what I was mentioning is there is a second opinion that says if there is a 75% probability you will end up losing the case, it's not 7.5 that you will pay, it is 10 lakhs that you are going to pay. So you should make a provision for 10 lakhs. Both
O-
are valid, but this is the alternate option that you can put in your solution. Okay?
okay, sir.
Because the court case is either here or there. It does not go in between.
Yes, sir.
So that takes care of question number 2. Okay?
Yes, sir.
Question 3. Mercury Limited is an entity engaged in plantation and farming on a large scale, diversified across India. On 1st April 20X1, the company received a government grant for 10 lakhs, subject to the condition that it will continue to engage in plantation of eucalyptus trees for coming period of 5 years. Eucalyptus trees are not considered as bearer plant in this case. यूकलिप्टस पता है ना सबको? The management has a reasonable assurance that the entity will comply with the condition of engaging in the plantation of eucalyptus trees for specified period of 5 years. Accordingly, it recognizes proportionate grant for 2 lakhs in the P&L as income following the principles laid down under Ind AS 20. Analyze whether the accounting treatment made by the management is in compliance with the Ind AS. Is in compliance with the Ind AS. If not, advise the correct treatment. Okay. So tell me, what do you think? Government grants. This is Ind AS 20. Read with Ind AS 41. आपने Ind AS 41 पढ़ा है. 20 तो I spoke to you. In Ind AS 20, I specifically mentioned that whatever is there pertaining to government grants, pertaining to agriculture, that is covered under Ind AS 41. ये कहा था ना हमने?
यस सर।
See, non-applicability. Ind AS 20 does not deal with government grants that will be covered by Ind AS 41 agriculture. Correct? Yes. So if we come back to the question, अभी Ind AS 41 आपने पढ़ा तो होगा, maybe you may not recollect. Okay. So now let us look
So
at
when any grant is given based on certain conditions, and when that conditions are met, only then that grant is to be recognized in PNL.
Okay. See, that is what Ind AS 41 tells us. Okay.
Yes.
You have to look at Ind AS 41. If a government grant related to a biological assets measured at its fair value less cost to sell is conditional, then including when a government grant requires an entity not to engage in a specified activity, then the entity shall recognize the government grant only when the conditions attaching to the government grant are met. The conditions attaching are met. Now look at this case. Have we met the conditions? The
No, sir.
management has a reasonable assurance that the entity will comply. So आज की तारीख में has it complied?
No, sir.
No.
No. So when it is not complied, it has not complied, obviously you cannot recognize the grant income. You cannot recognize the grant income. Is it okay? You can recognize the income only when the government, the condition is fulfilled. And when will the condition be fulfilled? The condition will be fulfilled after a period of 5 years. तो 5 साल के बाद ही आप उसको recognize कर सकते हो. So therefore, the correct treatment is what? Recognize grant as income only after 5 years. Only after 5 years. Are we okay with this?
Yes, sir.
Yes, sir.
Yes. Any doubts? No doubts. Okay, fine. Next. Okay, so we take a break here. Then we shall continue these two questions after the break. Okay, 4 and 6. Okay. All right. Quick break. We shall convene at after 10 minutes. Okay. All right. स्टार्ट करें? हेलो। हेलो। हेलो।
Sir, can continue, sir.
ओके, वी कैन कंटिन्यू। आप लोग हो, ठीक है। तो लेट अस मूव ऑन टू क्वेश्चन नंबर 4। Mercury Limited has sold goods to Mars at a consideration of 10 lakhs, the receipt of which is receivable in 3 installments over of 3,33,333 over a 2-year period. Receipts on 1st April, 31st March X2, 31st March X3. The company is offering a discount of 5%, that is 50,000, if payment is made in full at the time of sale. The sale agreement reflects an implicit rate of 5.36% per annum. The total consideration to be received from such sale is at 10 lakhs, and hence the management has recognized the revenue from such sale of goods of 10 lakh rupees. Analyze whether the above treatment is in line with Ind AS or not. If not, advise the correct accounting treatment. Bolo, is it as per Ind AS? Can I recognize the uh, revenue of 10 lakhs immediately?
Sir, discounting करके देखेंगे, sir.
Discounting आपको करना पड़ेगा. See, basically this is sale with a significant financing component.
Yes.
Which is the sale जहां पे consideration 2 साल बाद मिलता है. You give a credit period of 1 month, 2 months, 3 months. थोड़ा सा extend हुआ 6 months. Beyond that, everybody will say it doesn't work like that, right? But here you are giving a 3/1/3, matlab over 3 installments across a 2-year time period. So that is a strict indicator that this is a sale with a significant financing component. Okay, so now coming back to our question, the implicit rate is 5.36%. So if I look at the discounting consideration, I have to bring it to present value. Present value factor at rate of interest of 5.36% present value. So time of sale, at the time of sale, 3,33,333. This you are getting immediately. So this is going to be your PV. Then end of year 1. Again, you are getting 333, 0.949. 5.36% is the discount rate.
3,16,333.
Yes, 3,16,333. End of year 2, 0.901.
3,03,334.
3,334. So the total of this comes to 9,50,000. All clear?
Yes, sir.
Yes. So this is the sale value that you are going to book. So the entry that you will pass will be on the date of sale, cash bank debit 3,33,333 to revenue 9,50,000. The difference will be,
Debtors, trade receivables.
yes, trade receivables. 6,16,667. 1st April 20x1. 31st March 20x2. Cash bank debit 3,33,333 to interest income. This will be 33,053. How did I get this? 6,16,667 into 5.36. I am unwinding the discount to trade receivable. 300 to 80. And then cash bank debit to interest income.
16,947.
Yes. Six lakh 667 minus 316,387 minus 16,947. है ना? Is it okay? Tini, is it fine?
Yes, sir.
sir.
ये कैसे आ गया? This has come in as 3,16,000. This would be 6,16,667 minus 3,280. There would be a fine difference on account of rounding off. So just for that reason. 100-150 रुपए का rounding off gap is there. That is what is continue. So you can take this as a balancing. Okay, all right. Any doubt so far in question 4? All clear?
Yes, sir.
1, 2, 3, 4, 5. And last question number 6. HIM Limited having a net worth of 250 crores is required to adopt Ind AS from 1st April 20x2 in accordance with the Ind AS rules 2015. Okay, now Rahul, the senior manager of HIM Limited, has identified the following issues which need specific attention of the CFO so that the opening Ind AS balance sheet as on the date of transition can be prepared. So now, issue 1. As part of property, plant and equipment, company has elected to measure the land at its fair value and wants to use this fair value as deemed cost on the date of transition. The carrying value of land as on the date of transition was 5 lakhs. The land was acquired for a consideration of 5 lakhs. However, the fair value of land as on the date of transition can be was rupees 8 lakhs. Bolo, can we adopt fair value on the date of transition? Come on.
Yes.
Yes. And when I adopt fair value on the date of transition, is it a change in the model or is it just a starting point?
It's a starting point.
So जो increase है वो कहाँ पे जाएगा?
Retained earning.
Retained earnings.
Retained earnings. That's right. So your entry will be property, plant, equipment debit 3 lakhs to retained earnings 3 lakhs. Fair enough. It can do it. It's permitted. It is a
Yes.
starting point. You will not take it to reval reserve. You will take it to retained earnings. That's it. So that closes issue 1. Issue 2. Under Ind AS, the company has designated mutual funds as investment at FVTPL. Okay. Now, the value of mutual funds as per previous cap was 4 lakhs at cost. However, the fair value of mutual funds as on the date of transition was 5 lakhs. Okay. So, Ind AS, all investments other than investment in subsidiaries, associates, joint ventures should be recognized at fair values. Subsequent measurement could either be FVTPL or FVTOCI, depending on the business model. Now, in this case, investment in mutual fund is designated as FVTPL, and therefore, I will take this at the fair value. And where will I take the movement? Will I take it to P&L or will I take it to retained earnings?
Retained earning.
Retained earnings. Jeannie, convinced?
Yes, sir.
What about others? Who else are there? Okay. All right. Fine. Usha and Vinay. Okay. Fine. So investment debit 1 lakh. Retained earnings 2. Retained earnings 1 lakh. Okay. Next. Company had taken a loan from another entity. The loan carries an interest rate of 7% and it had incurred certain transaction costs while obtaining the same. It was carried at cost on its initial recognition. As per Ind AS, it should be carried at cost or fair value. Always fair value.
Fair value.
Instruments always at fair value. The principal amount is to be repaid in equal installments over the period of the loan. Interest is also payable at each year end. The fair value of the loan on the date of transition is 1 lakh 80 as against the carrying amount of the loan which at present is 2 lakhs. So क्या करोगे? I will have to bring it to fair value.
Yes, and difference to retained earning adjusted.
Yes, difference to retained earnings. 20,000 to retained earnings 20,000. Dini, did you follow? Vinay, Usha, did you follow? Pooja,
Yes,
any?
sir.
Okay, fine. So issue 3 is also resolved. Next, issue 4. The company has declared a dividend of 30,000 for the last financial year. On the date of transition, the declared dividend has already been deducted from the company's reserves and surplus, and the same is grouped under provisions. मतलब provision में credit दिख रहा है. The dividend was only declared by the board of directors and it was not approved in the AGM of the shareholders. However, subsequently, when the meeting was held, it was ratified by the shareholders. So tell me now, are you able to recognize a provision without shareholders' approval now?
No.
So, जो provision which is already recognized, can I recognize or should I?
Reverse.
Yes, I should remove that. है ना? This is sitting in provision. So provisions account debit 30,000 to retained earnings 30,000. Okay, so that takes care of issue 4. Next, the company had acquired intangible assets as trademarks amounting to 250,000. The company assumes to have an indefinite life. Indefinite is not infinite. Okay, indefinite is not infinite. The company estimates to have indefinite life for these assets. The fair value of the intangibles as on the date of transition was 3 lakhs. However, the company wants to carry the intangible assets at 250,000 only. So now, is it acceptable to carry it at 250,000?
Yes. Previous carrying amount can be taken over.
Yes. So the company wants to carry at 250,000, so permitted to carry. Is it okay? Ginny, Vinay, Usha,
Yes, sir.
all clear? Permitted to carry, no impact on transition. No impact on,
ये भगवान क्या?
है ना? So that is done. Next, issue 6. After consideration of possible effects as per Ind AS, the deferred tax impact is computed as 25,000. This amount will further increase the portion of deferred tax liability. So deferred tax liability is coming additionally. So 25,000. It will go to retained earnings, 25,000. There is no requirement to carry out separate calculation of deferred tax on account of Ind AS adjustments. Management wants to know the impact of Ind AS in the financial statements. So, ho gaya. We have given all the impacts with the journal entries. Did you understand? Yes?
Yes, sir.
Yes, sir.
All right. So that closes question number 6 also. So with that, I think we have done all the questions here. Case study 7 किया था कल, case study 6 we did, 5 we did today, 4 we had done yesterday, 3 also we had done, 2 also we had done, yes, and then 1 also we definitely did. Okay, fine. So that kind of closes the chapter on analysis of financial statements. So major things what you can remember or what you will have to remember in this particular chapter is you have to ensure that you know the standards very well. Okay, because they will ask you questions of the old regime also and the new regime also. So you will know the transition implications only when you know the standards perfectly. Okay, only when you know the standards perfectly. So that is one thing that you have to always keep it in mind. Okay, so with that, I think, yeah, we are done with this chapter. Anybody has anything else to say? in question 4, why contract asset is not debited? Which is question 4? So Vinay, what do you understand by a contract asset?
Right to consideration.
Agreed. But
Hmm.
what is the difference between a contract asset and a trade receivable?
So that is why I'm confused between both of them.
See, always remember, in a trade receivable, it is only the passage of time that allows you to, that entitles you to consideration. There is virtually no other event that you have to do. So when I
Okay.
sell the goods, and once I sell the goods, you only have the passage of time to give the money to me. It becomes a trade receivable. But when I give you something, ideally you have to pay money. But there is something extra that I am yet to perform. That time it becomes a contract asset. I cannot recognize it as a trade receivable because my obligation is not yet fulfilled. So let us assume that I have received a contract for 3 years, which includes 2 years of design and development, followed by 1 year of commercialization. Now I am going to deliver the product to the end customer only in the commercialization stage. But the first 2 years, when I'm putting in my efforts for design and development of the program of the end product which I'm going to commercialize, I cannot take the hit to the P&L because it will. You know what will happen? 2 years full cost will come. Then 1 year huge profit will come. That is not what Ind AS 115 recommends. Ind AS 115 tells, look, you have to estimate the total cost over the 3 year tenure. You estimate the total selling price. The margin is what you will accrue even in the development phase. But when I'm accruing the margin in the development phase, it cannot be debited to trade receivables. Why? Because I have still not delivered a product. And since I have not delivered a product, though this is an asset, I cannot collect it by mere passage of time. I still have to complete the development. Then I have to make a sale, and then I will have to recognize the I have to then recognize the trade receivable. So what will happen in that case is
Hmm.
what will happen is, so let me just draw the timeline. Just a second. Okay. So what happens is I have the first 2 years. This is a contract of 3 years. This is the design and development. This is the commercialization. My deliveries will start only in this period. But to recognize the profit only in the third year is not right. Because ultimately it's a 3 year lifespan of the entire project. So what I will do is years 1 and 2, I will accrue the revenue by passing the entry contract asset account debit to revenue. Okay. I will
Okay.
recognize this. Now, this revenue will be the total 3 year lifespan of the revenue. Okay. वो जो भी मेरे 3 साल का revenue है. Now, what will happen is in the last year, in the third year, actually the selling price that you will invoice is
Hmm.
actually this whole 3 years contracted price. So therefore, in year 3, what you are going to do is the first commercial product that you invoice, you will pass the entry trade receivable account debit to revenue. Okay. And then you will reverse this entry. So therefore, what will happen? Only the net revenue of the third year will sit in your P&L and the contract asset goes away and trade receivable is available at its fullest extent. Did you follow?
No, sir, in year 1 and 2, so I will recognize revenue for whole 3 year
No, you will recognize proportionately. You will recognize
proportion.
proportionately. What will happen now? Let me tell you. Year 1 and 2, there will not be any invoicing. Year
Yes.
1 and 2 will only be an accrual. So let us suppose for simplicity's sake, the total contract value is 300.
Hmm.
You are delivering only one product at the commercialization stage. The selling price of that product is 300. What you
Okay.
will do in years 1 and 2 is you will recognize a revenue of 100 in year 1 and you will recognize a revenue of 100 in year 2.
Hmm.
So your contract asset is at 200, your revenue is at 200 for 2 years. In the third year, my product is commercialized, ready, and it is accepted by the customer. So you will pass the entry for the invoice 300, 300. And then what you will do, you will reverse this revenue account debit to contract asset. How much? 200. So what is the implication? The contract asset that you had booked of 200 gets nullified. The revenue of 200 which you had recognized earlier does not get duplicated here. It comes back to 100. So you have effectively spread 100, 100, 100 over 3 years. You have effectively recognized a contract asset over 2 years because you still have obligations to perform. You can then recognize a trade receivable in the third year, but effectively the implication is 100 on your revenue. That is the meaning of contract asset. In question number 4, you have fulfilled your obligations entirely. Only you have given an extended period of payment. Therefore, it will remain as a trade receivable. It cannot go in as a contract asset. Is it okay?
Okay. Fine.
Okay, that's great. Good question. Okay, next. Anything else? Any other doubts?
सर एक्चुअली डाउट जो है हमारा इंड एस 101 से रिलेटेड है।
पूछिए।
सर जो मॉड्यूल में है डीम्ड कॉस्ट फॉर पीपी इंटेंजिबल एसेट एंड राइट ऑफ यूज ऑफ एसेट, पेज नंबर 14.19 पे उन्होंने 4 ऑप्शंस बताए सर, उसमें थोड़ा कंफ्यूज हो रही हूँ मैं मॉड्यूल की लैंग्वेज में सर।
1 second. Ind AS 101 ना? One second. Page number
14.19।
14.1. Okay. An entity has the following options with respect to measurement of its property, plant and equipment, intangible assets and right of use assets in the opening Ind AS balance sheet. Measurement basis as per the respective standards applied retrospectively. Okay, the measurement options can be applied on an item by item basis. So this is what? This is as if Ind AS was applicable right from the beginning. Okay? This is as if Ind AS was applied right from the beginning. So this is full adoption. There is no such terminology as full adoption. I mention it as full adoption just for the simplicity of understanding that यहाँ पे आपका पूरा मेहनत लगता है. You have your complete efforts being put in to measure each and every item right from the date of initial recognition as per Ind AS. And then you will arrive at the value on the date of transition, and then you do a switch over. So this is your full adoption. This is option 1, which I had explained already. Yes. Second option is you can go for the fair value at the date of transition. This also we had given in our explanation. Correct?
Yes, sir.
Third option is previous gap revaluation. If such revaluation was broadly comparable to a fair value or cost or depreciated cost in accordance with other Ind AS, adjusted to reflect the changes in general or specific price index. So
इसी पॉइंट में कंफ्यूज हो रहा है सर।
This we can use suppose just before I moved to Ind AS, I was following a revaluation model for gap also. Under that gap value, the revaluation जो हुआ था, that value is comparable to the fair value or the cost or depreciated cost. in accordance with other Ind AS. That means what? Ultimately, जो previous cap का revaluation हुआ था, that is approximating either to this value or it is approximating to this value. So this is purely a judgmental impact.
ओके, तो ये कॉस्ट और डेप्रिसिएशन कॉस्ट मतलब जो हम रेट्रोस्पेक्टिव फुल इफेक्ट देते थे, जो वैल्यू आती थी उसके साथ रेजोनेट होनी चाहिए
तो
एटलीस्ट।
आपने जो गैप में रिवैल्यूएशन किया,
यस यस,
वो वैल्यू should be comparable to the fair value. Or if not comparable to fair value, it should be comparable to cost or depreciated cost in line with Ind AS. So
Yes.
either it should be comparable to this or it should be comparable to this. तो ultimately घुमा फिरा के बात आके बैठता है या तो ये या फिर previous gap carry up.
सर इन केस प्रीवियस गैप में भी रिवैल्यूएशन मॉडल ही चल रहा था और इंडियस में भी हम रिवैल्यूएशन मॉडल ही अडॉप्ट कर रहे हैं, तो जो हमारा फर्स्ट डे ट्रांजिशन डे का जो हमारा इम्पैक्ट आएगा समझो, तो वो हम तब भी रिटर्न अर्निंग में ही लेंगे या रिवैल्यूएशन रिजर्व में रहेंगे?
I think we did one question that is a little, मतलब उसमें the standard is not given a clear cut guidance because there are two things involved. एक आपका पॉलिसी वही कंटिन्यू हो रहा है, कौन सा? रिवैल्यूएशन वाला. So
Yes.
there are some people who say the impact of revaluation should go to revaluation reserve. That is one thought of thinking which is correct. Other thought of thinking says, तो फर्क क्या हो गया? Where is the reader of financial statements able to understand that you have transitioned and taken the transition impact into retained earnings? So those people who advocate, they say that you can put it in retained earnings directly. Ultimately, when you do a transition, you have to show the reconciliation of opening retained earnings as per Ind AS with the closing retained earnings as per GAAP. That is the final thing that you have to prepare. That is a check that you have transitioned all items into Ind AS. वहां पे जब आप चेक करोगे, you will not find this transitionary impact of revaluation because you have taken it to retained earnings. So therefore, because you have taken it to reval reserve. So some people will say reval chalega because the policy remains the same. In that case, 101 reconciliation of reserves, that amount will not be visible. Some people will say you put it here because transition impact should be visible. In that case, reval reserve वाले बोलेंगे policy तो revaluation का है. So why should I take it in retained earnings? So both the arguments carry weight and both the arguments are correct. Okay? आप कहीं पे भी डाल सकते हो. For our understanding, it's better to put in retained earnings the first time and then you continue to revaluation reserve.
Yes sir, clear now.
Okay, all right. So that is done. Anything else?
Hello, sir.
Yes.
Am I audible?
Yes, yes, you are audible. पूछिए.
एक्चुअली कोई क्वेश्चन नहीं पूछना था, बस कुछ बोलना था एक्चुअली.
तो क्या बोलना है भाई? बोलो. Go ahead.
हेलो
Go ahead. Go ahead.
सर, एक्चुअली ये बोलना था कि सुबह में आपने जो क्वेश्चन दिया करने के लिए, उससे पहले यानी जो मुझे ऐसा था कि वो क्वेश्चन में यानी पैनिक हो, जिसके कारण मैं उसको कर नहीं पा रही थी.
Okay.
लेकिन जो आपने 10 मिनट्स में जो
Go ahead.
सर एक्चुअली जो म्यूजिक बज रहा है उसकी वजह से थोड़ी प्रॉब्लम हो रही है.
अच्छा, कहाँ पे? हमें तो नहीं सुनाई दे रहा है.
एक्चुअली सर हमारे फ्लैट में ही मैरिज है जिसकी वजह से.
ओके 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 ओके.
तो सर एक्चुअली उसमें जब आपने वो 10 मिनट्स का दिया था तो फर्स्ट टाइम तो वाकई में पैनिक हुआ, तो स्टार्टिंग में नहीं हो पाया था जो आपने वो क्वेश्चन दिया था.
See, I think that's
लेकिन
what.
फिर बाद में वो जब हुआ वो कंप्लीट, एक मिस्टेक हुई लेकिन यानी अच्छा लगा. तो मुझे
I
आपको
know. That's it. So
था.
basically, that's the whole point. I mean, it's a very, very beautiful subject. Let everybody who is there here, let us all agree that this is the only paper जहाँ पे हमारा comfort levels are reasonably good. I hope. Okay, whether it be Pooja or Vinay or Usha or Jeannie or whoever watches this, This is one paper where our comfort levels are really very high, because this is something that we have been doing right from day one of our commerce education, right? So your accounting paper is bound to be very comfortable. So there is no need for you to fear, no need for anybody to panic. You will an unfamiliar question, you just have to untie the knots. That's it. ये बड़े बड़े क्वेश्चन जो देखे थे आज, क्या थे? You just read the adjustment and you start untying the knots one by one. I think you should be sorted out. This being the first paper in your CA final, it creates a big psychological impact on the remaining papers in that group. Okay, in group one, if you are coming out of your first paper with a smile on your face, then that means that your group one is going to go very well, because यहाँ पे you get around 65 to 70, 75 to 80, then this bonus marks that you get will go a long way in reducing the stress for the remaining two papers. Okay, so that is financial management and your audit paper. Okay, so वहाँ पे it creates a very very big difference. You would have experienced it in your intermediate also. You will experience it in your final also.
Yes.
Always aim to get more than 60 in your accounting paper, in your reporting paper. हो जाएगा वो. It's possible. Okay.
सर एक्चुअली ये फियर आया ही फेलियर की वजह से था, जो आईपीसीसी में फेस करना पड़ा.
But that's okay. That also makes you strong. But always remember, ये जो पहला पेपर है, this is going to be the best one that you can give your shot at. The remaining papers, it comes between two exams. आपके पास बचता एक ही दिन है. So that stress is there. But yeah, this paper, if it goes smooth, I think you are sorted for the group. Okay. Yeah. Of course, you have to study the remaining two papers also. I'm not saying that, but उसमें ना the load is pretty less. Then you will be confident कि चलो यार कर लेंगे.
बट सर आज के इस पैनिक को कम करने के लिए मैं स्पेशल थैंक्स आपको कहना चाहती हूँ, इसलिए मैं आपको बोल रही हूँ.
Anyways, no issues. Thanks. Thank you.
थैंक यू
Alright.
सर.
Okay, so that's it from my side. Anybody wants to put in anything else? Pooja, any other questions that you have? Usha, Vinay?
सर अकाउंट सब्जेक्ट के अभी हम जब रिवीजन स्टार्ट करें तो रिवीजन जिस सीक्वेंस में हमें सिखाया गया उसी में करें या फिर उल्टी शुरुआत करें?
उल्टी मत करो यार, क्योंकि 101 will always come towards the end, है ना? So if you see the way the madam has, I mean, the board of studies has factored in your schedule, I think it's better you stick to the same one. Okay, of course, आप definitely थोड़ा up down कर सकते हो. Ensure that closer to the exam days, you are revising the major topics towards the end. A third revision probably, जैसे consolidation, financial instruments, Ind AS 102, Ind AS 33, Ind AS 90,
116.
Ind AS 116, Ind AS 115. These standards you start revising closer towards the end, and so that you will be fresh with those concepts when you are going to give the exam. Remaining you can revise anywhere, wherever you want. Okay, but keep 101 as a last check, just to see what all you remember. Okay, all right.
Okay, sir.
So that's it. Nothing else from my side, so we can conclude then. जाओ, संडे है, जल्दी छोड़ दिया आधे घंटे पहले.
Yes, sir. Thank you, sir.
Yes.
थैंक यू सर.
Thanks everyone. Thanks Vinay. Thanks Usha. Thanks everyone. Yep. Okay. See you.